New this morning, Bruin Capital raising $1 billion in capital to further scale its investments across the sports ecosystem. Joining us right now, first on CNBC, is Bruin Capital CEO George Pyne. Good morning to you.
Good to be here.
So you've raised some new money.
Yes.
Congratulations on that. It feels like everything is going up and to the right in the world of sports, sports business right now.
It really is. I mean, coming in here, you study the ratings. The NFL's best ratings ever, second best ever. You look at the games the other night in the quarterfinals, 19 million they averaged per game. The World Series, 26 million for Game 7, average 15 million. I mean, the category is red hot. You guys have the Olympics here. They've sold out. They have 100 new advertisers. The Super Bowl ads are sold out. I mean, it is red hot.
So what do you think's happening? Is it that sports is just taking business market share from other things? Is the pie expanding? Well,
I think in a fragmented world, things that aggregate millions of people become more valuable, and also the engagement's off the charts. I mean, 96 of the top 100 programs on television are sporting events. I mean, it's valuable.
How much do you think this is about gambling?
I don't think so. I mean, I don't think that gambling in the U.S. has really grown the way I would have thought it would have grown, when they legalized it. And, the other thing is you always had illegal gambling. Right. And for cost-effective bettors, you still have illegal gambling. So I don't really think, I think gambling's helpful, but I don't think it's driving the interest.
I agree with you, but I can just tell you, and I'm not normal. Everybody knows that. But when I was most recently in Georgia and there were games on, you can't bet in Georgia. And if it's just an average NFL game between two teams that aren't necessarily factoring into, the playoffs, I didn't watch them. I came back and I put $5 on with a couple of parlays, and I'm riveted to it. So I'm telling you, it does drive some engagement.
Well, I think to the hardcore fan or people that love it, it further engages them 100%. And it creates new ways for them to bet and to be involved and to watch games they might not otherwise watch.
Right, because if they're two teams that, they're both 3-11 or something, why watch it? But if you're betting on the quarterback or this guy's going to score a touchdown or...
It doesn't hurt, but is it really driving?
No, it's more than that.
When you think about this new $1 billion of dry powder in this space, where do you see the opportunity?
Well, we see the change in media consumption changing, going to different ways fans can experience the sport. So we invest in data, technology, and all the innovation around the distribution of content. And look, technology is disrupting people's lives, and we're investing in that as well. And
what does that mean?
So, we own a company called Full Swing, right? And we've had enormous success with it. It's golf technology. It empowers the TGL. But someday we build simulators, and someday you and I are going to be able to compete against one another in our garage, right? And it's closer than you think. We came out with a contest, which is really a betting product. It's going off the charts. So I can take a shot. I can bet on what that shot is. I can play you and compete, and we can gamble who's going to have the better shot. So
how much does that cost to put in your garage right now?
Anywhere from $25,000 to $65,000, whatever depending what level you want. But
you think that product becomes a consumer-grade product?
It is a consumer-grade product.
Well,
now,
I understand that. No, but what kind of price point do you think it has to get to reach the masses, if you will?
It depends. It's in $5,000 to $25,000. But, those types of things, technology is changing the way you experience sports with your friends. And whether that's people gathering in a room, whether it's you competing against a friend, technology is bringing sports to fans in ways it didn't before, and that's the stuff we're investing in.
What is the chance that we are in some kind of sports bubble?
Maybe
not around the NFL or NBA or some of the big majors, the Olympics and things like that, but maybe some of these sort of ancillary newer sports that are on the make.
Well, those newer sports are venture capital of sports, and they're not all going to work. But, look, 20 years ago, who would have thought the UFC would be what they are today? But they're not all going to work, right? But things like the UFC are going to break through, and so some will work, some won't. But right now, it's really the fragmentation in media and the ability to have big audiences around things you really like is driving sports. It's the one thing you have to watch and have to go to.
And how much, though, is it about the networks being willing to spend the money on this versus making the money through either ticketing, advertising, sponsors, social media, and everything else?
Well, it's going to change over time, right? The future is the lifetime value of the consumer. The future is going to be in data. That's the future. But you're in a transition, but still the viewership. I mean, look at what Netflix is doing on sports. And the other thing that the streamers are going to like about sports is advertising. Yeah. Advertising rings the bell. Like I said earlier, you have 100 new advertisers for the Olympics.
Right.
This stuff is sticky. People like it. where else do you go for that?
Are you surprised? I'm surprised that the NFL and other networks, the majors, have figured out ways to slice and dice their programming to so many different players. I mean, I think there used to be a thought, we have to be either, with NBC or with CBS, or we're going to be loyal to them. They're going to be loyal to us. But now there's almost no loyalty to anybody.
Yeah, well, I think when you're in the NFL or these other leagues, you're thinking about what consumers do I reach? And if I don't go through these other channels, I'm foregoing a whole consumer audience that I don't want to reach. So I think the NFL's done it quite thoughtfully, and I think when you look at what the NBA did with the NBA Cup and what it did for Amazon. So I think if you stay in one lane, you're going to shrink. Right. So you have to go out and try different things to reach different consumers and build different lines of business.